Your health insurance premiums went down while your brother's went up. Why was that? Hi, I'm Kevin Knauts with InsureMeKevin.com, and there are about 4 big factors that influence the rates in California for health insurance. So the first is where you live, next is your age, then there are big blanket universal changes that the carriers make every year. And then finally, if you're getting your individual and family plan health insurance through Covered California, there are the subsidy calculations. So first, let's look at where you live. You wouldn't think that would make a difference, but it does. California is broken up into 19 different rating regions, primarily because of hospital contracts with the carriers and different populations and demographics and where they can put together the different provider networks. But that all translates into different rates for all of those different areas. So sometimes they're not very much. Region 6 and 7 may not have much of a rate differential at all, but some regions have big variations. Like this one in West Los Angeles for a 40-year-old individual. The Bronze Kaiser plan with no subsidy, just the raw rate, is $299 per month, and the Blue Shield PPO is $401.89. If that individual moves up to beautiful Sacramento, California, or Placer, Yolo, or El Dorado counties, which is Region 3, that same Kaiser plan, same benefits, same everything is $391.82, almost $100 more. And the Blue Shield PPO plan jumps up to $530.65. Why? Well, some of it has to do with some of the contracted rates are just higher in Northern California, but you'd have to ask the carriers about that. But the big takeaway is where you live, your zip code can make a big difference. So just moving from one zip code to another, just across the county line, can make a big difference in rates. Next, happy birthday, you're a year older. The rates are based on age. There are a few age, like between 21 and 24, where there is no increase, but virtually every age as you get older from one year to the next will have an increase to it in terms of a percentage, maybe 1% or 4 or 5%. Now, with the Affordable Care Act, it limits how much the adult ratio rates can be, so that the 64-year-old rate can be no more than 300% of the 21-year-old rate. So, for example, if the 21-year-old rate was $100, and I don't know when we've ever seen a $100 rate for any health insurance for decades, but if you were 64 years old, the health plan could charge you no more than $300 for the exact same plan. So a 300% difference. Now, the rate curve, as you could say, is not a straight line. It is weighted heavier in terms of increase in premiums year over year towards the later years, because that's kind of usually when, things start going wrong after 45, 50, you have to go start seeing the doctor more often because of aches and pains. So the rates that go up from year to year, and this is fairly uniform across all the carriers. You'll see in the age 21 through 24, there's no increase, and then it starts jumping up. So by the time you're 28, you are looking at a 3.5% increase between 27 and 28. Then it dips down into those more established years where you get a career and you're not doing a lot of high adventure stuff. You're starting a family. But once you get into your 40s, you can see that those rates from one year to the next really start going up. With in your 50s, you will be noticing rate increases of 4 to 5.5% from one year to the next. So if your rate was $100 when you were 50 years old, it would be $104.50 the next year without any other inputs, just the rate increase. So you will always have a rate increase for most ages just by aging 1 year. The next category are blanket or universal rate increases or decreases. And we see this every year, and it's been very bothersome for many people because, the rates will go up on average 10%. This year wasn't too bad, but these universal rate increases, they're on top of what's already there. So it just floats everything up and it's laid across pretty much all of the different age ranges and different plans. Now, there can be some differences for the regions. Maybe a carrier will go up 5% for their PPO in one region, but drop their HMO plan. The same carrier may go up 6% for their PPO in another region, but also increase their HMO plan in that region. But the main thing is that it's a blanket rate and everyone gets them in that area. So in 2021, it was kind of an odd year. 2020, we had the pandemic. No one was going to the hospital. No one was seeing their primary care physician. Most people just stopped using healthcare services except for getting their prescriptions. And the health insurance companies took note of that. Now, the health insurance companies, they're pretty smart. They have a big staff of actuarial people looking at all the claims that come in. And they were also anticipating that 2021 would be light in terms of healthcare services. So we saw many carriers decrease their rates. So we saw many carriers go down 4%. Some of them went up 11%. And so it was kind of all over the board, again, depending on the plan type, HMO, PPO, EPO, and the different region. This one here happens to be the bronze rates for a 40-year-old in region 16. So that's layered on top of that age band and the region that we've already discussed. So that's one way that rates go up and we have no control over it. The next wild card is if you're getting a subsidy through Covered California. We would like to think that Covered California offers some sort of normalization or flattening or smoothing out of someone's monthly health insurance premiums. But that isn't necessarily always the case because the way the subsidy is calculated, a big input is your income. If your income goes down, the subsidies go up. But it's also based in large measure on the second lowest cost silver plan. So the second lowest cost silver plan in the calculation, if you are in the range where the subsidy calculation says you should only spend 5% of your income on health insurance, and the second lowest cost silver plan is $1,000, 5%, you should spend no more than $50 per month, which means the subsidy equals $950 to round it out to make $1,000. In this particular example here, San Mateo County, Region 8, we can see that the unsubsidized Silver 70 plan for a Kaiser HMO was $901.88 for a 55-year-old in 2020. The second lowest cost Silver plan in 2020 was Chinese Community Health Plan at $1143.28. Now, 2021 comes along and Oscar Health Plan, who was offering plans in San Francisco, expanded their territory and started offering plans in San Mateo. And they came in with a really, really good rate that undercut Chinese Community Health Plan. Oscar became the new second lowest cost silver plan, and the 2021 rate was almost $100 less than the 2020 rate. So if the second lowest cost silver plan is less than it was the year before, all things being equal in terms of your income, the subsidies go down drastically. As we can see for the Kaiser HMO, the age increase and the blanket universal increase, because Kaiser had an increase in 2021 across most of their plans, was 8.47%. But this particular individual, who was 55, then turned 56, has an income of $45,000 a year. They qualify for a subsidy based on the second lowest cost silver plan. In 2020, they were paying $109.98 for that Kaiser silver plan. In 2021, it jumped up to $285. Why? The Kaiser rates went up and the second lowest cost silver plan went down. And so it's a $175 difference and 160% increase from one year to the next. So the whole subsidy calculation and the second lowest cost silver plan kind of just throws everything out the window. I have had clients that their rates actually went down from one year to the next because the second lowest cost silver plan increased in cost relative to the plan they had selected. So if the second lowest cost silver plan goes up, everyone's boat gets floated up a little bit more. So hopefully that helps you get a little bit better understanding of how all these rates are calculated and increased. And a lot of things are stable depending on where you live, your age, and then those universal increases from the carriers. The real wild card can be Covered California and the subsidy calculation. So if you have any questions, give me a holler. InsureMeKevin.com. You can send me an email, leave a comment below, and I will try my best to answer your questions on these complicated health insurance topics. Take care.